Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Cautious start. Stocks edge higher to begin the week as investors await progress in U.S. trade negotiations. The U.S. Treasury Secretary says talks with Asia are going, quote, very well. Port explosion. Iranian state media says 40 people were killed and more than 1,200 injured in an explosion at a key commercial port in the state south. And as Riyadh Air moves closer to its first flight, the CEO, Tony Douglas, joins us to discuss the airline's new business offering, plus the impact of the global trade war on launch. Well, it's just gone 8 a.m. across the Emirates. I'm Johanna Versace in Dubai, everybody. Quite the solid end to the week last week for risky assets. We saw a strong rebound in the S&P, up almost 5% over the course of last week. NASDAQ up almost 7% as we get into another heavy week for tech earnings with some of the big names reporting. Remember, last week the focus was on Tesla and Alphabet. This week, attention will shift to Amazon, Meta, Spotify, amongst other names that people are going to be watching out for. And also in Europe, pay attention to some of the bank earnings that are coming through. So perhaps there is an opportunity to shift away from all of the headlines around tariffs to focus a little bit on the micro data this week. That being said, the tone over the last couple of days has been one of, I would say, marginal de-escalation when it comes to US and China. And so on the back of that, market has taken it quite well. Today, though, S&P futures are leaning towards the red. We are trading with a slight risk-off bias, down about 0.6%. We've got 10-year yields, however, trading around flat, 4.24%. And this on back of quite a stellar performance Thursday, Friday of last week. We basically covered about 10, 12 basis points in ground over the course of 2 days as more stabilization came back to that market. And then the USD also this morning, with the risk off, we are actually seeing a bit of a rebound in the dollar. So back to that usual typical correlation. So slightly firmer for the USD. On the week last week, also up 1.5%. So it tells you that all of those assets that got sold on fears around US exceptionalism are making a bit of a recovery. And then gold, this one is interesting as well because we had been talking for weeks about how much money was pouring in to the safe haven. That has started to change. And in the last couple of days, it has lost about 5%. Today, down about 0.8%. Again, as the most recent money that has gone into gold has started to come out again. And let's flip over. I did mention earnings at the top of the show. And this one is quite interesting because it just shows you that analysts are tilting towards negative revisions towards EPS around the outlook for the rest of this year, i.e., it looks as though what people had originally anticipated for EPS for many of these company stocks are on the lofty side, and therefore the split now between optimism and pessimism is leaning towards a more pessimistic take, i.e. we could see more downgrades come through. So that's quite interesting. And per the Citi measure, the revisions have been negative all year, with the most sizable downgrades coming through in the last couple of weeks of April. So that's something to bear in mind as we head into earnings week. Okay, let's check in on how markets in Asia are faring this morning. Avril Hong is in our Singapore studio. Avril, good to have you with us today. So just talk us through the price action because S&P futures are trading in the reds.
Yeah, we're seeing some gains in Asia's benchmark. I think, to your point, maybe about a bit of that wait-and-see mode when it comes to investing. It's still about the contours of the trade talks with the U.S. and its trading partners, so maybe not that much in the way of risk appetite, although you are seeing about 0.6 on the region's benchmarks in the way of gains. And part of that has to do with some of these corporate developments. I'll talk a bit more about that in just a bit. But note as well that today we were actually watching out for a briefing from the Chinese authorities, and it pretty much reiterated everything that's been said previously. So didn't move the needle, maybe disappointed investors as well. Then we look to earnings, right? For the likes of BYD, China's #1 automaker, it's been doing well in terms of beating Tesla, especially when it comes to sales. But now investors are turning their attention to profits per vehicle, and that's been declining. So the stock getting punished is actually the biggest drag on the region's benchmark today. The other automaker that we're watching today, Toyota, because we have some corporate developments, and it's the stock that is the biggest boost from the MSCI Asia Pacific today. Its chairman said to be proposing a buyout plan of Toyota Industries. So we're seeing that performance being expressed.
Avril, thank you so much. Avril Hong in Singapore. Well, it has been a cautious start to the trading week for U.S. markets as investors assess progress on U.S. trade talks in Asia, which Treasury Secretary Scott Bessent says are progressing well.
There are 18 important trading partners. Let's put China to the side because that's a special negotiation. There's 17 important trading partners, and we have a process in place over the next 90 days.
They want to make a deal, obviously. Right now, they're not doing business with us. You know, people talk about going cold turkey with China, meaning just forget about it. We were losing hundreds of billions of dollars a year with China. And now they're not doing any business with us, you know, not because of them, because of me. Because at 145%, you can't do business. But something's going to happen that's going to be positive.
Joining us now is Dan Scott, Vontobel CIO and head of multi-asset. Dan, it's really good to see you again. And so much has gone on in markets in the last couple of weeks. But, you know, I was just at the top of the show recapping some of the price action we had. And the markets certainly are behaving as though the worst of the market turmoil is behind us. Do you share that view?
Yeah, you can see, Jumana, first of all, thanks very much for having me on. It's a pleasure to see you again. Yeah, like you say, I think we're, past peak uncertainty here on tariffs. And we look like we're moving towards, the deal-making phase. So that's what's giving markets a bit of a reprieve, but there's still plenty of question marks out there. And as you rightfully were pointing out before, looking at the earnings revisions, going through company earnings right now, we need to see a clearing of the deck. We need to see analyst estimates coming lower, and we need to see forward guidance from companies. And at this point, before any deals are made, before we know where the final, net tariff rates are and what kind of an impact that has then on supply chains and corporate earnings, I think it's too early to go really fully positive on this market. So there's been a bit of a bounce back, and we understand why there's been a bit of a bounce back, but it's really too early to be able to assess what the final destination here on tariffs and the impact on corporate earnings is going to be.
Interesting. So not completely out of the woods yet. So what do you think is necessary to see a sustained recovery in equities? Is it about the China and U.S. cutting some form of a trade deal, or is it about the Fed actually being more gung-ho about the interest rate cutting cycle?
Yeah, absolutely. There are a number of puzzle pieces that are important here. So rates and inflation, of course, key for a top-down macro view on the global economy. And we went into this year looking for global GDP growth around 3%, with the U.S. growing above 2%, Europe around 1%, and inflation coming down to 2% on CPI in the U.S. by the end of the year. Things a little bit different now. Now we're looking at CPI, especially because of the goods inflation that will happen from the tariffs. Likely going to be around 2.5% by the end of the year. There are other disinflationary elements, but still, goods inflation will come short term, and growth, of course, is moderated. The expectations for growth, so that, of course, sets up a completely different picture for risk assets altogether. And I think what we need to understand is, how central banks are going to react. We're very confident that central banks are going to continue to cut. In Europe, the ECB for sure has plenty of room to cut. Inflation has come down meaningfully, and growth is an issue. In the U.S., there again, because of the goods inflation impact, I think the Fed's likely going to tread a bit more cautiously. But also there's no reason not to believe the Fed and their dot plot that they're going to cut another 50 basis points. So policy is coming down, and that's going to be good. That's going to provide some sort of a support to risk assets. And I think the other reason why we can at least be confident that we're not going into any deep, dark recession is when we look at corporate balance sheets, and we also look at the private consumer's balance sheet, balance sheets are actually quite strong. There isn't much leverage in the system.
Yeah. Yeah. I was looking at the Bank of America flow data on Friday, and there's one statistic that really jumped out to me. Treasuries, U.S. Treasuries, saw the biggest four-week inflow since March 2023. Would you buy U.S. Treasuries here? Remember, it was just a couple of weeks ago that the narrative was very, very bearish on the price action in bonds.
Yeah, absolutely. So there's been a big discussion about safe haven assets and whether U.S. Treasuries provide you the risk-free place to park your money that they have in the past. Has a lot to do with the dollar decline. Has a lot to do with Trump starting to challenge the independence of the Fed. These are all things that shake investor confidence around safe haven assets, and the reason why you saw gold pushing above $3,000 an ounce. People looking for other safe havens out there. And also here, tactically speaking, when it looks like the Fed is going to be cutting because of a slowing in growth, and there's a jarring of confidence, usually what you'd see is the dollar spike higher and people starting to buy treasuries. That didn't happen. But of course, with yields coming up to 4.5%, they become an opportunity again. So I think we're going to see a lot of these short-term tactical opportunities for the next 2 quarters, because the market is really sensitive and is going to react extremely nervously to practically every single data point they get, every deal that's announced or is canceled or is re-announced. And until we have some clarity on the end game here, the markets are going to have a good degree of volatility. I would expect at least another 2 quarters of this choppiness.
Yeah, wow. Well, not an environment that's conducive to good sleep and relaxation. Dan Scott, great to have you with us on the show today. It's always good to see you, Chief Investment Officer at Vontobel. Israel's central bank governor says his country's economy is at risk from tariffs. Amir Yaron spoke to Bloomberg about where he is seeing the biggest threats from the global trade war.
The global economy is seeing exceptional uncertainty. Most of the implications are that global trade will decline. With it, global growth will decline. Probably some tick up in inflation in the U.S. But the implications are far from clear. A lot of it will depend on what the final situation in terms of tariffs will be, what the duration of the uncertainty. But the word uncertainty is everywhere. And that's the key thing, that uncertainty in itself is weighing in on economy and on decision makers, whether it's companies, whether it's households, investments, and on sentiment.
Earlier this year, you talked about it being very achievable for the Israeli inflation rate to get down between that 1% and 3% range this year. It's not that far away from it right now. Do you feel like we're still on a path, you're still seeing a path in Israel to that inflation rate enough to cut rates even twice later this year?
So we've grown 2% in 23 and 1% in 24, kind of quite a bit below our potential, which is around 4%. But the Israeli economy has demonstrated great resiliency enduring an immense shock that we have. We predict that we will grow around 3.5% and about 4.5% in 25 and 26 respectively. And this is after shaving 0.5% due to tariffs. Israel, if I just say Israel is exposed to the tariffs, but our primary, because most of our exports are in the services, our primary focus and the way it can affect us is through the decline in global trade. And if we see stock markets sustainably low, also through VC investment into our high-tech area. In terms of the inflation and your question, we've had excess demand, basically because of labor shortages. We've seen active demand, and we need that process to come into balance. We see that process has started. We predict it will come into balance in the second half of the year, and with it, inflation will also continue to subside into our target. And we penciled in, if that happens, we will be able to do somewhere like around 2 cuts. That's what the research department penciled in, 2 cuts by within a year from now.
That was Israel's central bank governor Amir Yaron speaking to Bloomberg's Lisa Abramovich on the sidelines of the IMF meetings. Now, Saudi Arabia and Qatar have pledged to pay Syria's roughly $15 million debt to the World Bank. The move removes one obstacle for Syria's new leadership to receive funds from the international lender as it struggles to revive its war-hit economy. U.S. sanctions imposed on Syria's former administration remain a major hurdle for the new president Ahmed al-Sharaa to overcome as he seeks support to rebuild after 14 years of civil war. And coming up, we get the details about the latest U.S.-Iran nuclear talks as both sides welcome progress. More next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. The U.S. and Iran have reported signs of progress in talks on a deal over Tehran's nuclear program after increasingly detailed discussions. Economic, banking, and nuclear experts were involved in the talks. Both sides have agreed to meet again soon in Europe as substantial work still remains to be done. For more, we're joined by Dana Khrish, our UAE bureau chief. Dana, maybe just walk us through the progress. I feel like these rounds of discussions, we don't actually know the details of what they're discussing, but the fact that both sides come out of them saying that they're constructive suggests perhaps that there is a middle ground being reached.
I wouldn't say a middle ground is being reached. I say now that what they're doing and bringing in the experts that you talked about is about building trust around Iran's nuclear program. So they kind of want to make sure that this is for peaceful purposes. But as the Iranian foreign minister said, we got to be cautiously optimistic. He says determination is really good. This goodwill that we have to discuss these things is good, but it might be more difficult than we think it is. And he said, I am cautiously optimistic. So this is because there are a lot of sticking points here, whether the U.S. would agree for Iran to keep its nuclear program for these peaceful purposes, as Iran claims, whether there will be talk or discussions about Iran's ballistic missile program, which is what Israel wants. Israel wants the U.S. and Iran to discuss this and put a stop to it, which is also a big red line for Iran.
Yeah.
So yes, these are still technical, and they're going to meet next week in Europe or perhaps the week after, and Oman will have to actually announce where this will be. But the mere fact that they're discussing is good and reassuring. I think there are a lot of details that need to be hammered out before we say they are going to reach a deal on this.
And of course, let's talk about the explosion that took place in the Iranian port over the weekend. The death toll continues to climb. I believe the number suggesting almost more than 1,000 people have been injured as well. What do we know about what happened? It reminds me a lot of similar style to the Beirut 2020 port explosion.
Definitely. The scenes that came out of Iran from Saturday and Sunday, reminiscent of that port explosion back in 2020. There are murky details, right? Iran is not being very clear about what caused the incident, but there are so many reports suggesting that it might be chemicals stored at the port, and this is, Bandar Abbas, right? This is the largest commercial port, so they're going to be very much held accountable by the Iranian people if this becomes, if this pans out to be true. So chemicals stored at the port that used as rocket propellant, right? It is used for Iran's missile program. Iran is saying there were no, Iranian media citing officials saying there were no chemicals stored, but we saw a New York Times report, we saw other verified reports saying that, this is chemicals stored at the weapon, and that's what caused the fire. People in Iran are turning from sad to anger, right? You said 40 people had been killed so far and more than 1,000 injured. And this is massive damage at the port as well. So there's going to be a lot to find out throughout the week, but still the details are very murky. And I would say Iran is being tight-lipped about it until they actually start launching an investigation into the incident.
Dana, thank you so much for the reporting. That was Dana Khrish, our UAE bureau chief. The Israeli military says a strike on a Beirut suburb on Sunday targeted a Hezbollah precision missile storage facility, causing damage to buildings and cars, but no casualties. It is the third strike since a ceasefire between Israel and Hezbollah came into effect last November. Lebanon's President Joseph Aoun has called on the U.S. and France to force Israel to stop its aggression immediately, while warning of increasing regional tensions. And Ukrainian President Volodymyr Zelensky met with U.S. President Trump at the Vatican on Saturday ahead of the funeral for Pope Francis. Zelensky labeled the 15-minute one-on-one as symbolic and potentially historic, posting on X that the two leaders discussed a lot and he was hoping for results. Trump has dialed up pressure on Russia and Ukraine to reach a peace deal ahead of the 100-day mark of his second term. Coming up, the credibility of South Africa's national treasury is under scrutiny after flip-flopping on its budget proposals. That's next. This is Bloomberg. The credibility of South Africa's national treasury is under scrutiny as it backtracked on its budget proposals twice in 2 months. The government is struggling to meet spending needs while keeping the deficit under control. DA leader John Steenhuisen spoke to Bloomberg's Jennifer Zabazaja.
Well, this was a proxy for a wider battle. I think there's an internal war going on within the ANC with various factions going into their National General Council. And I think this issue around the GNU became a proxy battle for that. Needless to say, though, as you said, it was the VAT income was going to account for 0.7% of the budget. We've said from the beginning, if you can't cut 0.7% of spending, of deferments of savings, then, through savings and through increased revenue collection, there's something wrong with your accounting system. And so we're very confident that we can fill the gap now, and we look forward to playing a role in doing so.
What was the change factor, if you can?
I think it was the court case, without a shadow of a doubt. Treasury had an awful day in court, and all the way in to the court case, the minister's been arguing that there is no alternative to the VAT hike. And we've said from the beginning there are alternatives. Now there's been this volte-face in the middle of the night, a day after the court case, after a very bad day for Treasury and court, and we've seen that change of heart. So I must say, I think it was the fact that there was going to be an embarrassing court loss for Treasury that has seen them go back now to the drawing board.
Has it created the friction within the
Well, I think
coalition?
there's been a lot of friction within the coalition over the course of the last few weeks. And this is part of the introspection. We have to, if we're going to make the coalition work, find more mature, cool, level-headed ways to have controlled explosions behind closed doors rather than having uncontrolled explosions in the public arena.
Do you think that that's what this became?
I absolutely think that's what it became, and it spilled over into the public arena. We saw our largest coalition partner going outside of the marriage to seek other partners in this. We've only ever spoken to our parties in the GNU about this, and I think it's been a very unfortunate series of events. However, I think we can turn this into a learning curve and find ways to manage a 10-party coalition. And it's very clear, whatever your configuration you ultimately end up with at government, no parties are all going to agree on the same things all of the time. So you need to find these dispute resolution mechanisms, and I think this is now a good precipitator to us to look at how we can deal with these things better.
That was Democratic Alliance leader John Steenhuisen speaking to Bloomberg's Jennifer Zabazaja. Riyadh Air CEO joins us next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Cautious start. Stocks edge higher to begin the week as investors await progress in U.S. trade negotiations. The U.S. Treasury Secretary says talks with Asia are going, quote, very well. Port explosion. Iranian state media says 40 people were killed and more than 1,200 injured in an explosion at a key commercial hub in the country's south. And as Riyadh Air moves closer to its first flights, the CEO, Tony Douglas, joins us to discuss the airline's new business offering, plus the impact of the global trade war on the potential launch. Well, it's just gone 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. Let's get you up to speed on these markets. We saw a positive end to Wall Street by the end of the week last week. A big recovery, I would say, in S&P up almost 5% by the end of the week. NASDAQ up almost 7% by the end of the week. Today, futures not faring so well, though. We're dipping towards the red. Slight risk-off tone prevailing, down 0.5%. Though we continue to see stabilization in 10-year yields at around 4.24 is where we're at, so about 10 basis points lower throughout the last two trading days of the week last week. The USD also seeing somewhat of a stabilization today as well. A bit of green there, not a lot, but a bit of green. We were up 1.5% last week, again, over the course of the week. So some rebounds coming through for the greenback. And then gold, as all of these other U.S. assets seemingly recover, some of the sheen has come out of gold, and we've seen it take a tumble today, down 0.8%, though we are down about 5% over the course of trading as well. Looking ahead, we're going to be focusing not just on the latest with the discussions vis-a-vis tariffs between U.S. and China. There are signs of a thawing there and de-escalatory tone in nature, but then also big earnings. We've got tech earnings coming up, the likes of Amazon, Apple, Spotify to watch out for after we had earnings from Tesla and Alphabet. Alphabet well received by the markets last week. So let's see what's in store for tech this week. Obviously, very important because it sets the tone for the broader index. And here you can see that as of, most of this year, analysts have been revising downwards their forecasts for EPS growth out of these U.S. stocks. So the theme has been one of negative downgrades to company outlook, and it's unclear how that's going to change given the uncertainty in the air and the uncertainty on visibility on trade throughout the rest of this year. So that's something to watch out for as we get into more of an earnings week. Now, back to the airline space. Riyadh Air has unveiled its plush new business class seats designed to lure luxury travelers away from Emirates and Qatar Airways. They feature privacy panels, lie flat seats, mood lighting, and high-speed Wi-Fi. The startup carrier is set to begin flying near the end of this year as part of Saudi Arabia's broader push to become a luxury destination. Joining us now is the CEO of Riyadh Air, Tony Douglas. Tony, it's good to see you again.
Good morning, Jemana.
Let's talk about the unveiling of the interior of the cabin. That was a week ago, and it seems like it's been met with good reception on social media, at least. Do you think that this puts you in a good place versus the competition in terms of what Riyadh Air can offer?
Jemana, thank you very much. It's been super exciting. June of 2023, we revealed our liveries. And the liveries, of course, were designed to stand out in the crowd in a particularly elegant and fashionable and glamorous way. Paris Fashion Show, we released our cabin crew fashion. DiCaprio, Catch Me If You Can, TWA, Pan Am, with a real modernistic twist, designed elegantly to stand out in the crowd. Last week at the Jeddah Grand Prix, we unveiled our cabin product. Same proposition, glamour, grace, refinement in the skies, designed to stand out in the crowd. And up to now, just short of 500,000 people following on social media, a great response.
Yeah, it seems like it. So the new interior was designed for the Boeing 787s. Are you confident they're going to be delivered in time for the launch?
So Boeing 787 is the aircraft we'll go into service with Q4 of this year. But interestingly, we'll also put this interior into our A321 fleet, which we've ordered. And at the moment, we're in the process of an extra wide-body campaign as well. So the idea is you buy a ticket with Riyadh Air, whether it's on the A321 fleet, the Boeing 787 fleet, or an extra wide-body product, it will be the same proposition. In terms of delivery compliance, Boeing are starting to improve, but of course, those things can change in a heartbeat in our line of business.
Yeah, no, of course. So if the jets don't get delivered in time, are you still going to be on track to launch and send planes to the air by the end of this year? I'm just wondering how you square that in the absence of the planes being delivered. Would you therefore consider renting jets?
So we'll take the new deliveries, but the good news is now they're actually going down the production line in Charleston, the Boeing production facility. So you and I can go and do an interview standing inside the fuselages of our aircraft at the moment. So we're confident we'll take delivery at the end of this year. And of course, what's going to be inside for the travelling public is the next standard of glamour and grace, the Audrey Hepburn of the sky.
Yeah, okay, that's very clear. The last time we spoke was around FI and Riyadh, and you just made that order for the A321s. But you also just spoke to me now about potential wide-body aircraft order that you're thinking of making. When can we expect that to come through?
So we're hoping that towards summertime we'll be in a position to reveal which of the manufacturers has been successful for an extra wide-body aircraft. Our plan was always to have a 3-horse stable, a 3-aircraft fleet. So obviously the 321neo family, the news is already out there. The Boeing 787 family, the news is already out there. We need one bigger aircraft, which gives us more range and more seats. And the other scoop is we will put a first-class product in the extra wide body as well.
Okay, interesting. Let me just bring it back to supply chain issues, which have sort of negatively impacted the industry for a while now. And then you add to it the complications of tariffs and what that might do for the overall cost structure. How are you equipped to deal with all of that?
I think ambiguity has been an ever-present when it comes to commercial aviation. You know, pandemics, crises, oil fluctuations and supply chain discontinuity. I've been around it for over 30 years, and I can tell you, Jumana, there's always been an upslope, there's always been a downslope. At the moment, I think everybody is discussing the impact that tariffs might have. At the moment, we don't see any hard evidence of that playing through at this point in time. But again, we know those things can change in a heartbeat, so it's on the risk register.
And ultimately, what is that going to do to the overall cost structure? Are you likely to pass on some of these cost increases to eventual ticket pricing?
It's actually difficult to say, because at the moment there is no impact on the cost structure. In fact, look at global oil pricing. That's come off significantly, so that's the #1 cost in commercial aviation. But of course, as I said before, these things can change in a heartbeat, and we're very focused, we're eyes on.
Yeah, okay. So I guess the next time we speak will be when you come out with that wide-body order in the summer, you said. You teased in the summer, before the eventual launch.
It'll either be then, Jumana, or I'll be serving you in seat 1A at 38,000 feet.
I'll have to convince my employer to put me in 1A. Tony Douglas, very good to have you with us on the show. Tony Douglas, CEO of Riyadh Air. Well, Ghana's central bank chief expects inflation to further slow after already hitting a 5-month low in March. Speaking to us in Washington, the governor, Johnson Asiama, also gave us his outlook for monetary policy after raising borrowing costs last month.
You have a country where the fiscal deficit, has been quite high. As a matter of fact, the fiscal side of things has been the problem. So it's not surprising that interest rates are that high. But as you know, there has to be macroeconomic stability restored first. And then all other indicators fall in line. We expect that as the fiscal side of things get fixed, as government borrowing, and that is the PSBR, begins to go down. And recently we have seen interest rates on government borrowing going down, as inflation also continues to go down. We'll begin to see an easing in terms of the policy rate, and gradually we will see the lending rate also coming down. So it's not surprising at all what the situation is currently.
You mentioned fiscal policy there and the need for it to improve, and Ghana has a fairly new government. Are you in touch with the president and the finance minister and other officials about that? And is that a point you're stressing to them, that fiscal policy needs to tighten?
Oh yes, very much so. We coordinate our functions regularly. Remember, the budget has just been read. And if you look at the budget, fiscal consolidation is at the key, it's at the core of the budget. It gives us a lot of hope. Government is determined to end the year with about 1.5% in terms of the primary deficit. That will be good. When the financing of the budget improves, so does it impact on the rest of the economy. And so far so good. We've seen for the first 3 months of this year, under the new administration, we've seen a lot of fiscal consolidation take root. And as you can see, it's helping to give some comfort to the exchange rate. Apart from the other things we've done on our own, to ensure some stability. Yeah. We hope that the fiscal consolidation we are observing, the implementation of the budget, will all complement monetary policy going forward so that we can lower interest rates, fight inflation going forward.
Do you have a target for inflation for the end of the year, or do you have a sort of
So we
rate in
have
mind?
the fund program that is guiding us. We expect inflation to go down to around 16% by the end of the year. We are firing on all cylinders, and we are optimistic that we'll be able to achieve that target by the end of the year.
That was the Ghana Central Bank Governor Johnson Asiama speaking with Bloomberg's Paul Wallace in Washington. And Canadian voters head to the polls today after the snap election called last month by Prime Minister Mark Carney. The Conservative Party, led by Pierre Poilievre, was leading polls by about 20 points when Justin Trudeau announced his resignation in January. But since then, the race has tightened under the new Liberal leader and economic anxiety over President Trump's tariff war.
We need to fight Trump's tariffs with counter tariffs of our own that cause maximum damage in the United States with minimum impact here. We need to protect our workers using every single dollar we collect from those tariffs. And above all, we need to build Canada strong.
And coming up, as the UAE becomes a top destination for the ultra-rich, we discuss the appeal with Savills Middle East. Our Mideast Money segment is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Persechi in Dubai. The UAE has solidified its position over the past few years as the most attractive destination for the world's wealthy. It is estimated more than 7,000 millionaires migrated to the oil-rich nation last year, and their numbers are set to increase steeply, according to a series of recent reports. Let's dig into the appeal of Dubai and Abu Dhabi with Rachael Kennerley, Research Director at Savills Middle East. Really good to have you with us on the show. Those numbers are really startling. So many millionaires seem to be moving to this part of the world. What is the allure? Is it tax incentives? Is it quality of life? Why are so many rich people moving here?
So I think there are a mix of things going on, and the index that we've produced looks at individuals and corporates separately. So if we look at the individuals, we think there are sort of three things that we've measured: the personal wealth base, the quality of life, like you mentioned, and then the corporate tax, the tax environment. So those things are all playing out together, but there's also the push factors from other economies around the world. So if you're a wealthy individual, you're playing off multiple choices. So the other thing that really plays into the UAE is our location.
Yeah.
Globally, it's really easy to sort of come and go and be where you need to be.
Yeah. And is it, so I just need to clarify that the people that are moving here, to be clear, they're setting up base here. This is going to be their permanent home, or for some of them, is it them just purchasing holiday homes that they may use a couple of months a year?
So we think there are two things going on. There are those who are moderately wealthy, who are moving wholesale. So the where they're currently based doesn't suit them anymore, and they are moving. Whole family, everyone's coming. The super wealthy, they are buying an additional base. They're not leaving behind the networks where they're already set up, but they may start to spend more and more time here and make it home.
Yeah. Do you have any estimates for how many individuals and corporates are expected to move to the region in 2025?
No, I think estimating that is really difficult because it intrinsically depends on what else is happening globally.
Yeah.
But what we can say is there's definitely new emerging patterns of where wealth is going. So where you may have expected the likes of sort of London or real tax havens, historic ones, to be where the wealth sits, there is a flow, and the UAE is coming in top 2 of the 12. So we've got Dubai at number 1 and Abu Dhabi for number 2 for individuals relocating.
Interesting. So what impact is this all going to have on the luxury market then?
So the luxury market is really being driven by the arrival of these high net worth individuals. We've seen, if we look at transactions over 10 million dirhams, in 2020, there were 469 in the entire year. That's risen tenfold. So now 2024 saw 4,600 transactions. Most of those are in the off-plan space, 70% of them, and that is in response to the products that these wealthy individuals are looking for. And that's a really interesting pattern. I think what we'll see this year is some of that product delivered to the market, but also demand continues to outstrip supply, and there's a real need for luxury product, especially in the villa market.
Interesting. And what does that do to pricing in that segment of the market versus other segments?
Yeah, so in 2024, we saw 6.8% increase in values in the prime sector. This year, we expect to see 8 to 10, and that growth is ahead of the wider market.
I was going to say, so the luxury sector, your expectation is that it will continue to outpace the rest of the market.
Yeah, absolutely.
Because of that demand.
Yes, and because the supply of the product has been relatively small compared to the wider market.
And is it your sense that developers are identifying the opportunity here to come on and start building more in this luxury segment?
Yeah, definitely. We're seeing sort of pockets of luxury exists within newer developments, but you also have the existing stock, which is all being redeveloped, refurbished, which is really starting to meet some of that demand also. So you've got villas on the Palm, all being remodeled, transforming, the likes of Jumeirah Islands having a resurgence. So there are pockets of existing that are also entering into that sort of super prime space.
Yeah. And just to wrap things up, because obviously this is super topical, and global markets have been reacting to all of the decisions that are coming out of the White House. How is the geopolitical climate likely to impact the flow that we're seeing of rich people moving to the UAE, if at all?
So the impact of the tariffs is difficult to predict, only that we're still in a holding period. So we're sort of wait and see. We don't know what the final result will be. Real estate is intrinsically a GDP-linked asset. So the fundamentals of the UAE market are good. We have strong forecasted GDP growth of 4.5% this year and going forward for the next few years. I think what we'll see here is the stability that the governance offers is really attractive. We don't get these curveballs coming out, and so that will be attractive.
Yeah. Rachel, great to have you with us. That was Rachael Kennerley, Research Director at Savills Middle East. And for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. And coming up, it is a major week for European earnings, with some of the continent's largest firms reporting, particularly in banking and autos. We'll delve into the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. It is a major week for European earnings, with some of the continent's largest firms reporting, particularly in banking and autos. Bloomberg's Charlie Wells is here with a preview. Charlie, maybe let's just start with the bank earnings. We know from the U.S. banks that really difficult to have visibility about coming quarters, but yet it was a strong quarter for trading activity. How do we expect that to show up for the European banks?
Yeah, Jumana, that's exactly right. It's sort of this tension between trading and the trade war, where those first quarter earnings are expected also in Europe to show a boost from trading, particularly at some of these banks that have large equities trading units. I'm thinking of UBS in particular. But as you were saying, what everyone wants to know is how these executives are kind of positioning amidst all of this uncertainty, trying to figure out how some of these direct but also indirect effects of the current trade war could affect the bottom line. And I think it's going to be really interesting if we look in particular at Deutsche Bank. They're reporting on Tuesday. There's been so much optimism, so much momentum behind that stock because, they don't have that huge equities trading outfit, but they did get that significant boost from that German fiscal spend. So we saw a huge kind of uptick there, a downtrend when we heard more about this kind of trade tensions. Interesting to see how they kind of square the circle.
Yeah, and then, in the same vein, you've got UBS, the underperformer this year, and perhaps, some questions about the regulatory backdrop there, something that Armati has been quite outspoken about. But it's not just banks reporting this week. We also get quite significant results coming through from some of the auto majors, VW, Stellantis, Mercedes. I'm guessing there, the only thing that people are going to be talking about is the impact of tariffs and this trade war.
I mean, they certainly are. These, automakers are subject to those 25% tariffs that have been dominating the conversation. And these car makers have had a rocky prior year. And in particular, we're going to want to get a little bit of an update from the likes of, say, Stellantis and Volkswagen that tend to sell some of those slightly more affordable vehicles. And we've seen that kind of mid-range consumer is under pressure amidst all this uncertainty. We have some estimates for car sales in Europe, which are showing that they're actually looking like they could flatline this year and hit sort of the levels that we saw back in that kind of 2012, 2013 kind of post-GFC recession crisis. So a lot of pressure there on the consumer front, but also the trade front as we've got those tariffs in place.
And of course, not just that, but electric vehicles as well. We had BYD earnings come through. And what are we expecting on that front, Charlie, quickly?
Well, yeah, look, it's looking like there's just a major shift in the car sector as consumers kind of change. They have more options than ever. It's an increasingly competitive space, not just with European cars, but also with these Chinese competitors trying to enter the space.
Yeah, that's exactly it. With BYD once again overtaking Tesla vehicle sales for the first quarter. I thought that was interesting today. Charlie, thank you so much. Always good to have you on our show. Okay, a quick look at equity futures because Wall Street ended the week positively last week, but is starting the week not positively this week. S&P futures down 0.5%, NASDAQ down 0.6%, even though for the most part, we are seeing a positive pickup from Asia. But that was it for Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Stay with us for Daybreak Europe.